Welcome to our Intermediate Trading Concepts series. Today, we're delving into two popular investment vehicles: exchange-traded funds, commonly known as ETFs, and mutual funds. Understanding these financial instruments is key to diversifying your investment portfolio and achieving your financial goals. Both ETFs and mutual funds are collective investment schemes that pool money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other assets. Let's explore each one in detail and understand their unique features. ETFs are a type of fund that tracks indexes like the S&P 500, commodities, bonds, or a basket of assets. Unlike mutual funds, ETFs are traded on stock exchanges, similar to individual stocks. This means they can be bought and sold throughout the trading day at market price. For example, an S&P 500 ETF tracks the performance of the S&P 500 index, allowing investors to invest in the top 500 companies in the US with a single purchase. Mutual funds, on the other hand, are actively managed by professional fund managers. They make decisions about how to allocate assets within the fund. Mutual funds are priced at the end of the trading day based on their net asset value. For instance, a mutual fund may focus on growth stocks, bonds, or a mix of asset classes, offering investors a diversified portfolio managed by financial experts. While both offer diversification, they have key differences. ETFs typically have lower expense ratios and greater flexibility due to their tradability on stock exchanges. Mutual funds, however, offer professional management and can sometimes outperform market indexes, though they often come with higher fees. Choosing between ETFs and mutual funds depends on your investment goals, risk tolerance, and preference for active versus passive management. ETFs are ideal for investors seeking lower fees and flexibility, while mutual funds are suitable for those preferring professional management and specific investment strategies. In conclusion, both ETFs and mutual funds are valuable tools for building a diversified investment portfolio. They cater to different investment styles and preferences, and understanding their nuances is crucial for informed investment decisions. Exciting topics await in our Intermediate Trading Concepts series. Join us as we deepen your insights into the financial markets. Thank you for watching. Don't forget to subscribe to our channel and hit the bell icon so you never miss an update.